Hi viewers, 11th standard accountancy chapter 13 illustration sum. Inside the sum they have given sundry debtors, bad debts, provision for bad and doubtful debts. Outside the sum they have given additional bad debts and provision for bad and doubtful debts. According to bad debts, if they given two bad debts, if they given in bad debts inside the sum and another bad debts for outside the sum, we need not worry about it. But we have to consider about a provision for bad and doubtful debts inside the sum and another provision for bad and doubtful debts outside the sum. Let's take provision for bad and doubtful debts inside the sum. We consider this provision as the old provision. Okay, and let's take outside the sum they have given another provision for bad and doubtful debts. We have to consider this provision, outside provision, we consider it as the new provision. Do you understand? Okay. How can you find out the new provision 5% on debtors? Before we are going to find out 5% on new provision from the sundry debtors, we have to check that previous adjustment, whether they have given any bad debts related adjustment in previous adjustment. Yes, they have given additional bad debts in previous adjustment. So before we are going to find out 5% on provision for bad and doubtful debts on sundry debtors, we need to subtract this 4,000 rupees bad debts from the sundry debtors 1,04,000 rupees. So we have one small calculation for that. So we have to subtract additional bad debts 4,000 rupees from sundry debtors 1,04,000 rupees. We will get 1 lakh rupees. From that 1 lakh rupees only, we have to find out 5% provision for bad and doubtful debts. So 1 lakh into 5% means 5 by 100. After cancel it, we will get 5,000 rupees. This 5,000 rupees is the new provision for bad and doubtful debts. Okay. So I have entered 5,000 rupees for new provision. Okay. Now we are going to pass the adjusting entry for these two adjustments. Let's take first bad debts 4,000 rupees. What is the adjusting entry for the bad debts? Bad debts account debtor 4,000 rupees to sundry debtors account 4,000 rupees. Narration is bad debts written off. Listen carefully. If they given old provision with bad debts, we need to pause. We need to pause the transfer entry for this bad debts 4,000 rupees. Okay. So for that, on that same date, we have to pause the transferring entry for this bad debts. So the transferring entry is provision for bad and doubtful debts account debtor to bad debts account 9,000 rupees. How will you get this 9,000 rupees? We have to add 5,000 rupees from the inside bad debts and 4,000 rupees from outside the sum. Okay, we will get 5,000 plus 4,000. We will get 9,000 rupees. So the narration is bad debts transferred to provision for bad and doubtful debts amount 5,000 plus 4,000, we will get 9,000 rupees. And now we are going to pass the adjusting entry for the new provision for bad and doubtful debts. On dated column we have to enter the same date 31st March 2016. The new provision adjusting entry is profit and loss account debtor to provision for bad and doubtful debts account 12,000 rupees. Okay, how will you get this 12,000 rupees? I will explain you later. Before that, each and every adjustment is to be going to appear on two places or two times in the final account. That is, listen, additional bad debts, provision for bad and doubtful debts, new provision, old provision, bad debts, whatever it is, this and all we called it as the irrecoverable receipt, right? When you sold on goods on credit to your debtors, this amount is not irrecoverable, was not irrecoverable from your debtors. So this and all we consider, we call it as the loss for the company. All the losses and indirect expenses is to be debited on the profit and loss account. So on debit side of the profit and loss account, it appears. So on debit side, we always started with 2. Okay, 2 bad debts, how much rupees? 5,000. two bad debts 5,000 rupees. With this bad debts we have to add additional bad debts 4,000 rupees. So we have to add additional bad debts 4,000 rupees with 5,000. We will get 9,000 rupees. Then we have to add the new provision. How much rupees? 5,000 rupees. So plus new provision for bad and doubtful debts 5,000 rupees with 9,000 we will get 14,000 rupees. Finally, we have to subtract that old provision 2,000 rupees. Okay. So, minus old provision for bad and doubtful debts 2,000 rupees subtracted from 14,000, we will get 12,000 is to be entered on outer amount column on the debit side of the profit and loss account. So, now you very well know about how will you get this 12,000 rupees. Okay. For new provision for bad and doubtful debts, 9,000 plus 5,000 minus 2,000, you will get 12,000 rupees. And another time, that second time, this adjustment is to be appear on asset side of the balance sheet. Okay. So asset side of the balance sheet, sundry debtors 1,04,000 rupees less additional bad debts 4,000 rupees. So we have to enter 2 times in the final account. So additional bad debts 4,000 rupees is to be subtracted from the sundry debtors 1,04,000 rupees. We will get 1 lakh rupees. Okay. We will get 1 lakh rupees. From that 1 lakh rupees we have to subtract that new provision for bad and doubtful debts 5,000 rupees. So from that 5,000 rupees you have subtracted 1 lakh rupees, you will get 95,000 rupees.